banker himself. Joining us now is the Managing Director and CEO of Bank of Baroda, Mr. Debadatta, joining us all the way from Frankfurt, where he is at a meeting. Thank you very much, Mr. Chand. Good morning to you. I'm sure it's very early morning over there. But the first point is there is no cut just yet. Is that a sigh of relief? The Reserve Bank seems to indicate there is space for one more cut.
Thank you, Lata. I believe currently, because of the market scenario, the global scenario, it's better to keep our, the cut in the coming months rather than doing it now. Considering the growth side has been very well balanced at this point of time, inflation has been very benign. I don't think there was a requirement, anything to cut the rate at this point of time, and the RBI has clearly said they would be reacting to different market scenario going forward. I think this is the best case scenario possible at this point of time, and quite happy with this.
Okay. Well, for the banking system as a whole, do margins bottom out in the third quarter as of now?
Lata, I believe as far as the repricing or the resetting of assets are concerned, they are all done. But you have to see whether this quarter has taken the full impact or the coming quarter would take the full impact. But as far as resetting, realignment are concerned, the asset side, it has been completely done.
Yeah. Okay, sir, I'll come back to the policy. I mean, it's fairly straightforward. It was an expected dovish pause. But, there is a whole lot of steps for people like you. First up is this ECL framework, expected credit loss framework, becomes law as of April 2027, but you all get a glide path up to 2031. How prepared are public sector banks like yours? Is that a bit of a challenge to be ready on April 2027?
No, Lata, I don't believe it's a challenge. Actually, banks like us who have been preparing for long. And it talks about something meeting to a global requirement in terms of the ECL framework. And I think many of the banks like us, we do have a substantial PCR on the NPA side. At the same time, also do have large standard asset provisioning as on today. So considering that, I don't think there is any way going to impact there is a glide path there to meet that. At the same time, on the system front, on the policy front also, we have been preparing for long. I think it's a right move to make Indian banking matching to the global requirement in terms of ECL. And I think there is a glide path, and all the banks, including us, would be very capable of migrating to this scenario.
Will there be an immediate rise in provisioning in FY27?
I don't think that the reason being the final computation that we have to do, but there will be marginal impact. But we, as I said, we are also holding good amount of standard asset provisioning, right? So that would take care of any additional requirement of the ECL. There will be some impact, but then you have to come out at the right time with regard to after doing all the computational part as far as the bank is concerned.
Yeah. I don't remember your reserves, but I think Bank of Maharashtra in particular had huge amount of reserves. So I guess most of you will be having some standard provisioning reserves. The other big relief that has come for you all, or rather incentive to lend, is that large exposure framework goes. Now you can lend more than 10,000 crore to one group. Will that spur credit growth, you think, for banks? Will you expect a higher number this year?
It would be. This is a measure to have a higher exposure vis-a-vis many of the group entities. And as you know, many of the group entities, they are expanding in terms of capital, and it would typically give us more opportunity to lend them more. So I think it's a very welcome move. It's something can really create a higher growth for the banks in terms of the credit outgo. At the same time, allow group to expand, particularly on the capex side. So I think it's a good move to have, and even if we operate globally, we see, the ability to lend higher definitely helps the economy to grow faster.
Okay. By the way, even deposit premiums are going to be marketized, so to speak. I guess there will be a minimum deposit insurance for everyone, but thereafter it will depend on the risk perception of the bank. Will that be an advantage for public sector banks?
It will be. We have been demanding, this is something we have been requesting for long, and I think this is one way, like the moment you are trying to, on the asset side, put risk weight and capital firm, Now, time has come to improve the quality of liability on the bank side. So the moment this kind of the market pricing of deposit happens, possibly it would allow the right kind of banks to have more deposit. And as you know, deposit has been slightly on the lower side for last many years. So I think it's a very good move for to keep a market premium for banks to mobilize deposit, and it will be positive for banks like us.
Okay. And the other very big announcement is now you can fund acquisitions. Is that opening up a new area of business, and will that push up credit growth for banks like this year and next year?
Well, I strongly believe that. As you know, Bank of Baroda, we are operating globally, and we have been doing debt financing for acquisition since long. So we have this skill set, or we have this the way to lend for the debt financing for merger and acquisition. I think it's a very good move. It's aligning ourselves in terms of international best practices on the credit delivery. And I think that would give us substantial, like Indian companies can also think of going global now also. So it's a good move to, create adequate demand from the bank side to lend more, at the same time putting our banking practices in line with the global practices. And we as a bank, we have been doing it in the global operation since long, and we're quite hopeful of doing it also in India.
Okay, well actually, let me just get some numbers from you. Do you think net interest margins will bottom out in Q2 or Q3? What's your expectation?
Once we announce the quarterly, we'll be in a better position to articulate on this. But as I said, that as far as the repricing or the resetting of advance rates are already done.
Okay.
The only thing we have to see that...
Okay, so more or less bottomed.
The full impact of all this. Yeah.
Okay. And the other thing, credit offtake. What is your number for this year, either for yourself or for the sector, now that you have, more avenues to lend?
Absolutely. As I said, our full year guidance always been 11 to 13%, but exit quarter can be slightly higher than this number. As you said, as you've seen that the Q1 and Q2 almost at 11 to 12%. So we still hold on to the guidance of 11 to 13% credit growth for the full year. But exit Q3, Q4 can be a higher percentage considering all the measures announced today. And also we are getting into a busy season as far as the economy is concerned. So quarter to quarter can be higher, but overall still I think the system as a whole, the growth can be 11 to 13%.
Okay, so if you can hold on for a minute, Ritu, I'm sure you're bursting with a few questions.
Yes, Mr. Chand, just to come back to the regulatory ceiling against debt securities and IPO financing, how significant, we wanted to understand, we have exact numbers now. The RBI is proposing to enhance the limit for lending by banks against shares from 20 lakh 5 times to 1 crore, and for IPO financing from 10 lakh rupees to 25 lakh rupees per person. How much additional headroom is there, and what kind of credit will this unlock?
I think it's a positive move. Like the capital market has been very strong for many years, and now if you look, the deposit also, many people are moving to the capital market. That is what we have seen in the past. So in that scenario, a very strong capital market. Now the limits are also to be higher, so that banks can also have an indirect exposure because of capital market. Yeah. So as a bank, we don't have much of exposure on this as compared to many of the other banks. But I think it's a very positive one because since we have a very strong capital market, the payment and settlement system are excellent as far as the India is concerned. In that scenario, these limits are, I think, are in a manner which typically gives them huge opportunity for us to grow in this segment. But you have to figure it out how much exactly would be the case therein.
And what is your understanding, Mr. Chand, of the sort of relief measures that have been announced for exporters? Of course, keeping in mind, the higher tariffs that may kick in, depending on how the negotiations go, extending the time period for repatriation from foreign currency accounts of Indian exporters in IFSC from, 1 month to 3 months, to increase the period for forex outlay for merchanting trade transaction from 4 months to 6 months. And the third one is to simplify the process of reconciliation of outstanding entries related to exports and imports in their respective reporting portals. Just help us understand how important these moves would be for the exporters.
Yeah, very important. This is what actually post the tariff thing the exporters were demanding. We have been, as a bank and as a system also, we have been interacting with the exporter, post these tariff measures. And I think these are going to help them in terms of creating their own liquidity at the same time, sustaining their operation, that is more important. So all these measures earlier also when the COVID happened, at that time also many such measures were announced. And I think this is going to help them in terms of rationalizing their entire operation. At the same time, helping them, allowing bank also to have a liberal terms in terms of the export finance. And that's something I think going forward is going to be positive for the exporter.
Okay. So before we let you go, I know you have a big meeting in Frankfurt. One last question. It's about a week since, not a little more than a week, 10 days since the GST rates have been cut. Are you noticing any spring in the step in terms of personal loans, retail loans, BNPL kind of loans? Any higher credit demand?
It is so. It is so. Post-GST, I think we had one of the very strong last 10 days of the auto loans, the demand. Actually, it went up a significant amount day-to-day basis post the GST cut. So GST is going to spur the consumption. GST is going to spur the housing purchase, the auto purchase, and all those things. And we've already seen for last around 17 days with the September month. And I think going forward, it is going to be very strong as far as the consumption, the demand from the retail, particularly on the auto loan side, many of the consumer finance side, many of these even housing sales side. I think these are going to be very strong.
Okay, sir, thank you very much. We have taken a lot of your time. It must be early morning, 7 a.m. or something for you. Thank you so much for giving us your first thoughts and have a great day out there in Frankfurt. So clearly from one of the biggest bankers in the country, the mood is very, very positive. The GST cut itself has spurred retail demand. As we heard, auto loans demand have been seeing a huge spring in its step. As well for banks, large exposure framework gone, so they can lend more, they can lend for acquisitions. And Indian companies, as we can see, every day our research team is reporting a bunch of acquisitions which Indian companies are looking at. Banks can participate in all those, they can lend more for capital market operations, lend more for IPOs, lend more loans against shares. So clearly there is a kind of a deregulation that has clearly set in, and that's very positive. And on the monetary policy side, well, bond markets are really unhappy, 6.6% on the 10-year. So bond market transmission is not going to happen, but looks like bank-related lending could find some kind of a recovery, some kind of a spring in the step. That's the word from the monetary policy that has been just announced by the Reserve Bank Governor. From Ritu and me, thank you very much for watching. We will be back covering Mint Street at 12 noon. When the governor begins his press conference. For the moment, it's a break, and then there will be a lot of discussion with stock market stalwarts on what they made of the policy, especially for the banking sector.